Happy Friday, y'all! And today, looking at what is happening in the stock market, it wasn't a happy Friday. Yeah, I can give you that because it's it's stressful, man. It's depressing because everything the market gained since what Wednesday, all right, it lost everything and a lot more on top of it. All right. And yeah, it's one of the reason behind it. What is the reason behind it? Well, something that I believe to be something we already knew, all right? Not a new information. And that's why I believe this whole thing, it's about what may potentially come in the next few days, but also what came in as news yesterday, which I didn't believe the market really, kind of, catch up to it. And now it seems as if, yeah, it is bringing us closer to what certain people will think to be like, yeah, we are in there, like recession, and it's going to be the end of everything, etc., etc. But if you look at the facts, because as always, the market tend to overreact on the good side, I mean the good news, and on the bad news, because the market is always trying to get a little bit ahead of what is happening. The market is always trying to anticipate. It's what we call pricing in. So pricing in, factoring in what is going to happen in the future, next days, next week, next month, just now, because it's going to help people kind of reshuffle, reposition themselves in order to know where to put the money, for the money to work for them while they sleep. And this is how you build wealth. So let's see how we can do the exact same thing, because that's the bottom line. You want to make money not only by trading your time, for dollars, but also when you sleep. And that's how you build generational wealth. So what exactly happened? As you can see, the market pretty much lost everything it gained and a lot more. Look, we're already kind of getting ahead of the curve, on the the bad curve on the 25th, and then we lost everything, and then we were kind of in this ping pong thing, and then boom, we hit again, and then since then, man, everything is just going. So just to give you an idea of how bad things look today, we have to go back to 1970. The Dow and the S&P 500 booked the worst April since 1970 as US stocks closed sharply lower. Tech rout gives the Nasdaq its worst month since 2008 because it lost 4% today. Here it is, 4.17% to be entirely exact. So I can understand a little bit what is happening here because of the Federal Reserve, because anytime you have interest rates increasing, you also can expect, tech sectors to be very, very, very in the defensive. But earnings came here and gave us the idea that, well, you look at some of the companies, not all of them are bad, but look at, Amazon. Amazon lost 15% today. What is the last time Amazon lost 15%? Is that even something we could think about? Amazon. I mean, can we even live without Amazon anymore? So it's really hard. So it tells you how the fear, it's really bad out there. And as a matter of fact, by looking at the VIX index, it is again above 30, above 32, above 33. And you should look at, all this year or the last year, this was in the mix of, March 7th when the war started, so we are kind of flirting with those levels. And that is one of the reasons why I believe this is a little bit of an overreaction, because this is not the first time that the Federal Reserve is saying that we are going to increase interest rates 2 times in a row at 0.5% each time. I think now the market is kind of anticipating the fact that because of this news, because of, the US GDP is falling at 1.4% pace to start the year as pandemic recovery takes hit, meaning that the economy is shrinking. The economy is supposed to grow, and, the economy, even though 2021 and 2020 were really, 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 really great years and months and quarters. Now we are just starting to get some of the impact of, high inflation, but more importantly, of maybe the conflict in Ukraine and Russia. And that's why people are so much on the defensive, putting market away and putting money out of the market to kind of wait and see how this recession thing, because this number pretty much means that we are 50% away from a recession, because a recession is 2 consecutive quarters on the down, on the red. And this is the first time since this year that we're hearing about a 1.4% in the red zone, so a decrease. All right. So I believe these two are the rationale behind the market puking again today. But I believe it's an overreaction because on one hand, earnings are not that bad. All right. Secondly, the reason why earnings are bad, even for the companies like, Google, Amazon, Netflix, maybe not Netflix, but some of those, even our companies, are really because of what is happening, in Russia and Ukraine. Meaning that as we move into the second quarter, inflation might start to be easing a little bit, just a little bit, or maybe at least to stagnate. That's why I think. Now, based on everybody in like defense mode, based on what Federal Reserve is going to do, which we already kind of know, all right? I'm thinking once they actually increase those rates back in May and June, for whatever that number will be, 50 basis points, 0.5%, 0.5%, or even 0.75%, then people will exactly, kind of, digest information. The market will have priced in fully, this is the new environment we need to be working within. All right. And that's when I believe, stocks are already in a very, very, very good entry points. Meaning whether you are investing for the long term, whether you're investing, on few swing trade like I'm doing right now, these are good entry points. I would have loaded today, but I already loaded on Wednesday thinking, we hit the bottom. But hey, you cannot time the market. The most important thing is to be in the market so that you can ride the wave up on the recovery, because it will recover. It will recover once with those interest rates are now in, and the market is now kind of digesting. As I mentioned earlier, boom, we're going to hit the next bull run. And that's when you need to be positioning yourself now in order to kind of get ready and benefit, take advantage of those, So I already shared with you guys what I'm doing, what I'm buying, or what I bought so far. But, still doesn't make it easy, man, when you're losing 100,000 on your portfolio just in a matter of a week. Yeah, it sucks, man. It sucks.